I wanted to go ahead and make a video about trap entries and kind of what we're looking for in trap entries. This is meant to be essentially an introduction to taking trap plays and trap strategy overall. And we're just going to go over some of the basics here. We'll go over how to enter, where to place our stop loss, and maybe a few other things. We might leave actual profit targets out for the time being, just because they can be a little bit more of a complicated subject. I plan on making some more videos about this subject, but for now I just kind of wanted to make an introductory video and talk about sort of what we're looking for and the basics of everything. So if we're looking at the charts here, we zoom way out. See, I've already drawn up a bear channel here. Pretty large one. Within the channel we can find another channel. I've already counted some entries here. First entry short. Let's see. Second entry short. First entry short. Second entry short. First entry short. Second entry short. And we're at the very top of this large channel here, so we can expect bears to be selling here, and to be selling somewhere really close to the top. This is our second entry, so it would be, our trigger would be in here. Now, as we're pushing back down, we can expect that any sort of bull attempt at a reversal is likely going to fail. That's why we're not looking for bullish entries anymore. Remember how we talk about, if we're in a bear channel, we're not looking for bull entries. We're not trying to go long. We're trying to find reasons to be going short. Up in this area is a great place to be going short. And there's a few other opportunities too. Once we're in a bear channel here, and we're in an area like this where we can expect a lot of bears to be selling, we can look for failed bull entries. So let's just count entries for the bulls real quick. First entry long, second entry long here, first push up, second push up. This is second entry for the bulls. Key entry area, 20 EMA. We can still expect it to fail. It does. If you're a bull and you took this second entry here, where would your stop loss be? Your stop loss would be one tick under your entry bar. Make this red for stop loss. If price pushes up a little bit and then breaks back down and hits your stop loss, if you took this long here, then you would have been trapped inside of your trade. On the other hand, if you're a bear and you want to take a trap entry, then this right here would be the place to do it. You can place your sell stop market order at the exact position where the bull stop losses are going to be. So it's going to be one tick under the entry bar here. And if you did that, you would get filled to go short at the exact spot where bulls were no longer in the market. And you see in this case here, we had a really nice reaction from that. As we continue to push down, we can continue to count bull entries here. We can count them for both bulls and bears. In fact, let's do that real quick. Let's go back up here. Second entry short here, push up. First entry short here, push up. Second entry short here. And what does that make this? This really just makes this trap even better. if you really think about it. We're at the 20 EMA where we fail to find any support for the bulls. Second entry long, it's also a second entry short, which means that it's completely possible that more bears are taking this trade. So you're getting filled with bears already taking this trade. You're getting filled with the bulls not likely to buy and bring the market any higher. Once their stop losses get triggered, you get a very big trade. Let's keep counting. First entry long. Second entry long. Get trapped out. Have a small range. See, these bars are starting to get smaller and smaller and smaller, starting to lose momentum. If you look at the bars over here, you look at how these bars generally get smaller. You generally start to have climactic bars where we have a large bear bar, doesn't go anywhere. Large bear bar doesn't go anywhere. Decent bull bar doesn't go anywhere. Bull bar closing at its high doesn't go anywhere. We're starting to see a big slowing of momentum. This is bears slowly taking profits. Market slowly slowing down. So you want to be careful about trap entries when you get to have a lot of wicks in and around your price, because chances are it may not go very far. Some of the best entries are at places where there's already going to be bears selling anyway. In this example, this large channel line is the best spot. Every bear in the world is going to look to get filled somewhere in this area. So we know that there's a good chance there's going to be others taking the same side, and we know that there's a good chance that the bulls are going to fail here. Once we start to get back down here, not only are we more in the middle, in fact really to the lower side of the middle, we draw out a midline here. We'll just say that's the midline, pretty close here. Starting to get underneath the midline, way underneath the 20 EMA. Bears are not as likely to sell here. And that's why price just kind of drifts down slowly and surely. Let's look at some other examples here, especially for short entries. We have our second entry short, 1, 2. We mainly want to focus on counting bear entries in a bear channel. If we zoom out, see we're in a bear channel here, and a bear channel here. Primarily want to focus on looking for bearish entries. And on a basic level at least, we definitely don't count long entries because we're not interested in them. However, we still can whenever we're looking for a trap here. If for whatever reason you did not get filled in here on this second entry, or you missed it for whatever reason, then there can be some other opportunities here. You can go back and you can begin to count long entries, and you can begin to potentially find an entry point to look to go short, where otherwise there wouldn't be one. So let's count real quick here. We have our 2 short entries. First entry long, second entry long. We do trap out. Where would we place our order? We place it here. If we were to take this specific trade, which I'm not necessarily trying to validate this trade, it's just an example. Bull stop losses are here. We can place our entry short here, and we can look to get triggered. Now, if we didn't take this for whatever reason, mainly that this particular trade has a lot of risk, then we can look for other entries. Move this out of the way. First entry long. second entry long, and where are the stop losses? It'll be right here. I know I used the blue line. That's where the stop losses are going to be. So we can look to get in at other points in time. Some quick things you might want to consider when you are looking to take traps is how much the channel line's actually developed and how far we are from the 20 EMA. Sometimes if you can get it where it rejects the 20 EMA, it can be a better trap to take. Let's go back up here for a second. I mentioned the enormous risk previously on this trade, and there is quite a bit. If we entered here on this red horizontal line, and we will just say that we need to find a stop loss. Okay, well, where would the stop loss be? Well, stop loss has to be at the previous high, meaning that however high up these bulls took the price before the trap got triggered here, that is where you need to place your stop loss. So in this case, it would be one tick above this high right here. Now sometimes if you have some extra room, I mentioned this before as well, if it's just an extra tick or two, sometimes you can give yourself a little bit extra room and put your stop loss here. I'm going short, so obviously my stop loss would be buying back my shorts. That's why this line is green. It would be one tick above this high. Sometimes if you can afford it, you can get one tick above the previous high if it's real close, but we're primarily looking at one tick above this previous high. Now if we took this trade, let's see how much risk we have. We have 5 points of risk. So this is certainly more risk than what I would like to have. However, when it comes to trap entries, a lot of times you'll find that the more risk a trade has, the greater the probability of it winning. Might seem kind of strange. Why would that be? Well, if you really think about it, if we are in an area where we can expect bears to be selling and bulls begin to buy up the market and we take the price higher, then whenever the bears come in, they begin selling again and the bull stop losses get hit, there's a lot more shares in the market or contracts in the market that just got liquidated. So the price tends to drop fairly quickly, fairly fast. And that's why a lot of times in situations like this trap entry right here, you don't see quite as much of a follow through from it. It's not in an area where most of the bears were selling. It's relatively far away from the price. It's been trending for a while, and there weren't a lot of bulls buying it up. Bulls didn't have a big reason to buy here. They weren't very interested. There was no real reason. We're not at a place of support for them. There's no reason to expect this bar being the one bar of the entire day to reverse everything. So there's no reason to buy here if you're a bull. So whenever the few that do buy here, whenever they get stopped out, there's really not a lot that happens. You have to be very in particular whenever you take trap entries. You have to understand the context really well, and you have to be able to count entries really well. You really do have to be extremely aware of entries for both bulls and bears all the time. If you're not, then this can get pretty confusing pretty quickly. Let's look at some bull examples for a second. Primarily going to focus on counting bear legs in this bull channel just to demonstrate the traps. First entry short here, second entry short here. If we took this trap, where would our entry be? It would be get back to my lines here. Entry long, 1 tick above the high. Stop loss, 1 tick under the low. If we took this, what is our risk? Risk is 4 points in this particular trade. Something you'll notice that a lot of times to take good trap entries, you have to be willing to risk more. And it kind of makes sense, really, especially if the price is on the move and trap entries are happening a lot. Then it kind of makes sense that you're going to have to be willing to risk a little bit more to take these entries. So a lot of times, whenever you do take these entries, you're going to have to take them half size to what you normally trade, sometimes even less. Something else that you'll sometimes have is you'll say, okay, well, my average risk per trade is 2 points, and if I half size that, then that allows me to risk up to 4 points per trade. So I'm kind of right at my risk limit here, even trading half size. So I'm going to go and I'm going to enter on a limit order. And entering on limit orders on trap entries is fine. There's nothing wrong with that. But you'll find that the really good trap entries, it's really difficult to get filled on a limit order. If you want a little bit better price, if you want, say, a half a point or a point more, sometimes the market will retrace. In this case, it did. You had to wait quite a while, though. I never feel incredibly happy about my entry whenever I get filled in a situation like this where the price comes back. But it is what it is. Sometimes the price just shoots straight up. Sometimes the price is really you're only able to enter on a stop market order. So just be aware of that. Let's see, here's first entry short again. We do not, this is actually back where it was, we do not go above the previous high. So this is still in first entry short, push up, second entry short here. Does this trap out? Yeah. What's our risk here? If we entered here, stop loss would be here. We have about 6 1/4 points of risk. It's quite a bit of risk right there. It makes this trade really, really difficult to take. However, kind of like what I mentioned before, the more risk you have, generally the better the trap entry. And in this situation, we have exactly that. Lots of bull momentum shooting right straight up. Had a real big push up. Bears tried selling in here. They couldn't get the price back down. Bears tried selling in here. It didn't go far before it went right back up again. Let's look at this real quick. Something interesting happens here. So we have something called double traps, and double traps don't happen very often, but they do happen. This is an instance of one here. We count our short entries. We have first entry short, first entry long, second entry short, second entry long. Now, if this is a second entry long, where is our stop loss? Where is our position? Our order. Order is going to be right here. Going short, our stop loss is going to be here. Buying back our shorts. And look what happens here. We have a trap. We don't go very far. Let's see here. We entered on a stop. We only get about 3 points out of this trade, so we don't get very far. And then we have a reversal up, where bears are then stopped out, and bulls gain control. So bulls are stopped out here, first entry long, second entry long, Bull's getting stopped out into a trap. The trap fails and then reverses back up, and the bulls make a profit. It's not something that happens very often, but it does happen. And I get asked a lot, how do you take this trade? And well, to be honest with you, it's really, really difficult. But you can do it. Basically, you're just betting on the bears failing here. You have a few options. If you're a bull and you enter here, and your stop loss is here, and you get stopped out, okay, stopped out. Now, if I'm a bull, I can say, okay, inside bar, inside down, had a nice big tail, maybe I want to look to enter again. I can enter here on a first entry with my stop loss here, or profit target here. We'll use a blue line for entry. Entry here, stop loss here, and profit target here being the previous highs. Or I could say that I want to enter as a bull here on this bear trap, where my profit target is going to be the same and my stop loss is going to be the same. So 1, 2, bears become trapped. There's bear stop losses are here now. So I can, as a bull, take my order and place it right here where the bear stop losses are to get filled for a nice move up. What's the big problem about this trade? Well, 6 1/4 points of risk. That's quite a bit of risk there. Whenever you take trap entries, you have to be extremely, extremely aware of your risk and how far the market actually has to go. Make sure the market isn't overextended to begin with. Frankly, you should focus most of your attention on second entries. That's where the most reliable trades are going to be. There's plenty of trap entries throughout the day that are really good to take, but have to be extremely aware of them. Okay, so this is a quick little intro on traps. We went over where we look to enter, where we look to put our stop loss. We didn't really look at profit targets. I will probably review profit targets in another video. I feel like it kind of deserves a little bit more focus on itself. But feel free to, if you're new to taking traps, feel free to start taking them on sim, and you can just go for your standard 2-to-1 risk reward to risk, and you should be fine for now. But be very careful with them, play around with them on sim, but this isn't something to mess around too much on live, because there are a lot of things to consider. So, hope this helps, and hope you learned something, and I will be making another video on this soon.